Good evening, everybody. Here is the strongest, was Thursday's webinar? I'm sure it was, Bill. Oh yeah, I'm kind of sloppy tonight, so I didn't put the video on. I don't look any different than the last time, maybe a few days older. But here's the relevant information that we got in today's trading. When the markets moved back below the T-line the other day, stochastics are still heading up, but we don't know whether they were going to back off. I didn't think they would come back all the way down here. The only reason I thought that was not going to happen is because of the strength of the McMuffin. And then today, with the gap up and the positive trading, that was a good indication that this was still in effect. This was still the relevant reversal. So there's been so many times, and I say so many times, in my early days, there were so many times when I saw a reversal signal, and I said, oh, that can't be. There's so much stuff going on that nobody's going to be buying. So you got to kind of figure, yeah, that could be too, the Van West. But I've looked back so many times, especially when I'm looking for this type of signal to illustrate what it is, a McMuffin, but I can't even remember seeing a McMuffin signal and then seeing the market go back down. Now I say that, knock on wood, but the probabilities are so strong that this has been a reversal of investor sentiment, and this is a reversal of investor sentiment, our J-hook pattern, that no matter what the rhetoric is out there, yeah, that's my cuckoo clock. Whatever the rhetoric is out there, this is actually what's happening. So if you combine the analysis and say we got a morning or a McMuffin, which is a combination of two high probability reversal signals or trend signals. The Morningstar signal tells us we're heading up. The Doji sandwich says we're heading up. Looks a little bit doubtful, but now we've got another strong pattern that tells us the probabilities are that we're heading up. So when you put this all together, I'll bet you dime to donuts that in a month from now we'll look back and say, yep, that was a strong reversal signal. So that was the Dow. Now, this is why 2 plus 2 analysis is that much greater. We can see we had the Morningstar signal here with your best friend Doji gap up on the Morningstar signal followed by the Doji sandwich. But look at what happened today in this J-hook pattern. A kicker signal. So not only can we recognize the pattern setting up, but we know the pattern setting up or the uptrend starting wave 3 with your strongest individual candlestick signal, which is the kicker signal. So again, this is where you kind of put 2 and 2 together, saying, all right, J-hook pattern starting with a kicker signal. That's kind of confirming for the, whoops, that's why. That's why this is important to understand the signal and then being able to identify the pattern that's related to it. So we got the same thing over here on Apple. Now, does that mean Apple is, no, I'm saying that wrong. The fact that Apple is doing the same type of signal, especially with a best friend gap up, kind of a McMuffin right here and now a J-hook, what's that tell us about the overall investor sentiment going on? that they're doing strong buy signals in the ones that everybody's trading, a best friend is a doji followed by a gap up. The reason we call it your best friend is because it has two major functions. One, it tells us with a high degree of probability we're heading up. And two, it's going to head up with a lot of force. So that's what we call part of that list, the top ranked signals and patterns, which is candlestick signals in combination with each other or in combination with a pattern, where it improves not only the probabilities of being in the correct direction, but improves the probabilities that the correct direction is going to provide a strong profit. Tesla, not anything great. However, look what it's setting up. If this opens positive tomorrow, what type of pattern do we have? There you go. A flutter kicker. Yep, and a J-hook pattern. And a breakout of this resistance level. So notice where it closed or opened and closed today. It closed here. They gapped up above the previous day's open and did a doji. Now, very simple. Even on a day trading basis, you know you've got an extremely high probability day trade going in the right direction based upon the doji rule, and it's going to move in the direction of how they open after the doji. And two, that they've gapped up. There's a lot of force there already that even on a day trade basis, you're going to be moving higher. Yeah, the difference between a doji sandwich and a flutter kicker is this is a red candle followed by a doji followed by a green candle. Doji sandwich is a green candle followed by a doji followed by another green candle. But they still represent the same thing. More than likely, a flutter kicker is going to have more energy to the upside, but the doji sandwich is still telling us exactly what we want to know is oh, I forgot what I was saying. No, that we still have a good, strong uptrend. So here again, put 2 plus 2 together. You can see the J-hook pattern. You can see how it broke out through the 50. And how did it do it? With a kicker signal. What's the implication? We're heading into wave 3. And so if all the big stocks are heading positive, what do you think everybody always trades? Obviously the big name stocks. So we got a little J-hook type pattern setting up in Netflix. Probably the weakest of all the major traders, but it's still implying that lots of buying is coming in to all these stocks, which means even though we can pretty much detect that based upon the markets themselves, that if the markets were strong and these stocks were not trading strong, I would say, all right, the big ones that are usually traded aren't getting the bullish sentiment, so it's going someplace else. But the big ones that are always traded might be saying that maybe there's not as much oomph in this market. In this case, when we can see the pattern setting up, especially with the strong signals, the best friend signals, the kicker signals, do big days like this tend to pass over many of the smaller players because everybody's buying the big boys? Usually what will happen, John, is it goes in a sequence that if they start buying, the market starts buying the big ones, and it's probably not as true today as it was 30 years ago, that when the market starts heading up, everybody becomes confident when IBM and all the big names were moving up, and then the smaller ones will start moving up also. But right now, I think there's so much money in the markets that, and we're going to go through some of the smaller ones, that there's so much money out there that it needs some place to go that they're buying the big ones and the small ones at the same time now. So when we recommended LVGO today, it was also based upon this kicker type signal that occurred on Friday and a J-hook type pattern. So first of all, we know that a kicker signal is going to illustrate there's going to be more upside. And secondly, we know if this is a J-hook pattern and this is wave 1, where was our obvious resistance level? Right about in here. And so what do we expect from wave 3? To be the same as wave 1? What's that tell us about this kind of resistance level? It's not there anymore. It's going much higher. So another one that I've been following is M-chip, microchip. Look what it did today. Your doji best friend gap up through the T-line. So what's our prospective target on this one? Well, this is where we can visually see what everybody else might be watching. First of all, we kind of figure wave 1, wave 3, the same magnitude. That would probably kind of put you up here to the 50, maybe as high as the 200. And there's a gap right here at the 50. So the people that are watching the gaps, that's their target. So it just improves the probabilities that you can pretty much calculate where your upside potential is. So on an option trading basis, maybe it's too expensive to buy these calls right here. But it might be less expensive to do a spread, knowing that it could go up to this level, that maybe you buy an 80, 85, or a 75, 80, something that doesn't necessarily need to go all the way up here, but you improve your probabilities of being in that spread, knowing that it'll probably go right through that level, and now you're going to maximize out at the $5 level if it's a $5 spread. I tried to recommend this one today. We found this one in the training over the weekend, which if it opened positive, we had a bullish doji sandwich J-hook pattern, but then I saw that it wasn't coming up on CQG, which I use for illustrations, which is this chart service, until I realized that I was typing in the wrong symbol. So this is still very viable. Wave 1, wave 2, going into wave 3, which tells us we'll probably exceed that level up here. So the benefit we have of being able to recognize which are the strongest signals and patterns is now we can also add our analysis of which one has the best upside potential based upon where are the targets that everybody might be watching. Oh, I think I bought the microchip spread a while ago because I didn't want to pay up for all the price. And I think I bought the Aprils, which is still 2 weeks away. Unfortunately, I was buying right here. Notice what we had. I think that's a red candle. Let's make this big enough where even I can see it. Yes. So what did we have? We had a red candle, gap up, doji. What was that going to set up for a signal? If it opened positive, we had a bullish flutter kicker, meant more upside. Well, then the market turned soggy. Everything pulled back. But what happened down here? This is what's going on with quite a few. Yes, it's a bullish, called a bullish flutter kicker because it opens here, closes here. They gap it up the next day, which is your first clue there's strength coming into this trend. Gap it up above the previous day's open. But when it does a doji, it's not very decisive. But now we fall back to our doji rule, which says it's going to move in the direction how they open it after a doji. So if it opens positive, what do we expect? We expect it to trade positive, which means if we took out this little flutter, we basically have a kicker signal. let's see, I was doing DK. DK, you just stay long as it stays above the T line. We were recommending ENIA because of the best friend signal on Friday. It still has the potential of doing a doji sandwich on a positive open tomorrow. Still making the 50-day moving average your likely target. So what have I done? Oh, the last big one is Boeing. Boeing needed to get up through the T line. Notice the signal that it did today. Your doji gap up. Where's your next likely target? Wave 1, wave 3, probably at least back up here. What do you do with that? I can't afford the spread or the options that they have, where each option might be $3,400, but I might be able to go up here to 170, 175 and buy that for inexpensive, and then if it goes up through the 175, I maximize the profit. We'll get to Codex, which might be almost the next one because I'm now coming down that column. All right, so Codex was exactly what we kind of looked for. I mean, you kind of assume that you're in a wedge formation. What have I done? Kind of your wedge formation, and they gapped up today out of that wedge. So you have a doji gap up through the resistance level. Now what do you do? If it opens positive, you can be buying it because it tells you the wedge breakout is in progress. And you're using the simple doji rule that it's going to move in the direction of how they open it after a doji. So the J-hook pattern tells us something. It tells us wave 1, wave 2, wave 3 is usually the same magnitude as wave 1. So it allows us to make projections of where our likely target is going to be. If that's wave 1, wave 3 is going to probably bring you up into this area someplace. CrowdStrike. Wave 1, wave 2, look at your little inverted hammer doji, kind of bobble breakout, wave 3. That was the same reason we were buying. No, not this one. ZS. Whoops. I was typing wild, man. ZS. Started your uptrend, pulled back. Where do we think wave 3 can eventually take us? Same magnitude as wave 1. What's wave 3 tell us about our resistance level right in here? If they break through this, look for a lot more upside. Okay, so the 170, 175 spread is $1.90, which fits into my criteria. If I'm going to buy a $5 spread, I don't want to pay any more than $2 for it. And the reason for that is, a lot of people say, well, if you can double your money, isn't that good? Not if you're going by what the risk-reward is going to be. First of all, it's got to head in the right direction, which a lot of investors have a hard time even figuring that out. Fortunately, we can do it much better with candlestick analysis. Secondly, it's got to move the magnitude that you expected. So that's two major factors, and then commissions really doesn't make any difference anymore. It used to be the commissions with a little bit of an influence. But you also have to worry about the bid-ask spread, even though you're doing the spread. I don't know, Neil. That's a whole different conversation. Now remember, as you go further out, well, I can't say that. You might have as good a spread cost. So, oh, asking KC. Sorry about that. I think that was that May? Oh, that's it for May. Okay. Oh, that's on which one? Boeing? Okay, so the 160, 165 is at 205. That's probably getting pretty close. If I could get it hit at 2, that would be fine. When do you get out of your spreads? Whenever it tells you it's time that the stock price, the reason you're buying the spreads is because you think the stock price is moving in a direction. Remember, options are just merely a method for buying the stock. So let's say it pops up and then turns around. That might tell you to get out of that position. Now, that is more so on the calls than it is the spreads, because what dictates the price of your spread? The one that you bought, and then the one that you sold. So there's going to be times where the one that you bought is not going to move up as fast as what now becomes closer to being at the money, and the one that let's say that again. The one that you bought, as the price moves up, becomes more in the money, so it's going to move slower. Because why do people buy options? Because they want to get the leverage. Which means if the stock starts moving up substantially, if you bought the 160s, they're going to move up, but not as fast as the 165s, because that's closer to your in the money. So even though your stock price is moving in the right direction, if it's moving too fast, if you bought those that 160, 165 spread for $2, it could go to 172 real quick, but your spread may drop down to 180 because the one that you sold, the 65s, have moved up faster in price than the 160s. So that's why when I'm doing a spread, when we do the spread session here in the next pretty soon, week or so, we'll point that out, that if I'm doing a spread, I'm usually keeping it to about 2 weeks, because I don't want to be too far out in front, because if the price moves, you might have to sit with your money stuck in a trade, even though it's moved nicely in the direction that you wanted it to, but it won't maximize out until the last day or getting close to expiration, because that's when the difference of the two strike prices will start spreading to their actual price. Total confusion? Okay. Doesn't your long call cover it instead of assignment? Yes. More than likely, if you have a spread on, the brokerage firm is going to let whoever's trying to exercise so they'll just let the other, because even if they exercise it, then you exercise your other side of the spread. If it goes through both of the strikes, can't you exercise to gain maximum? You could, yeah, but then you've got the commissions that if you've got 10 contracts of options on each side, now you've got the commission, which may not be as big a deal anymore, for buying 1,000 shares and delivering that 1,000 shares. So yeah, we're getting way off track. So we'll talk about all that on our option spread night. Okay, so J-hook patterns working well. Do you recommend PO out as it going up? No. I'm putting on, many have zero commission, so, but anyways, we'll go into that much more. Yeah, and there might be times, and I'm working on that right now also, of when it's beneficial to do a credit spread by selling a put spread, not buying a put spread, but selling a put spread, which is bullish. So anyways, we're getting way off track, which I often do. So what is more compelling as far as a J-hook pattern is our bobble breakout. And the bobble breakout is just more defined, where we knew where the resistance was. There's our left-right combo, and there's our breakout. That's even more indicative that there's a J-hook pattern in progress. DRD, same scenario. There's a bobble breakout gapping up through the resistance level. And we saw that in our OSUR, the bobble breakout, that's the result. There was another one, Visto, when it broke out. Now today it did a bearish engulfing signal in the overbought area. So what's our strategy tomorrow? It has to open positive and trade positive to stay in it. Okay, so right now there are tons of best friends out there. So to analyze, is this our best criteria or our best trade? Well, there's our first target. There's our second target. So that's about a 25% return. It's good, but what else do we got sitting out there? This one could come up here to this level from 34 to maybe 45, 40, or 50. 15 points on a $34 stock, that gets closer to a 35% return. So that might have more more potential. Melly, good strong chart. Probably wouldn't pay $500 for a stock, but might be a very good spread situation on that price stock because of the best friend signal. So every time I see Melly, I think of how we would always tell our mother she looked so melancholy. She had a head like a melon and a face like a collie. So here's Zillow, also a best friend signal. So here's the exact type of trade setup or trade movement that we thought that the Dow would do, except the Dow didn't come back, or the figured they came up, did a stutter step, and would head back up. So this is a high probability trade, but it looks like the indexes are even stronger right now than individual stocks. For whatever reason, where these restaurants are starting to come back, same scenario here. Starts up, there's your stutter step, now there's your next move, there's your next likely target, there's a gap to fill over here. So we're looking at a lot of stuff that gives us high probability upside. So here's G3, best friend, kind of a double bottom. Where's your next likely target? Could be all the way up here. It took them a lot of selling to get there real fast, so they could get back up there real fast, which means you could go from 750 to 1325 very quickly. That would give you about an 80% upside potential. Jay, that is probably we can all make estimates or projections or opinions on when the when the virus restrictions might be lifted and business gets back to usual. We don't know. But what we do know is that people that are actually making their decisions about buying restaurant stocks or any other stock is with the knowledge or the expectation that maybe something will happen. And what we have often found, or what I have often found, is the accumulative knowledge of everybody buying and selling is usually much more correct than just somebody's opinion or what each one of us expect will happen. So if they're starting to buy stocks again, in everybody's mind that's making their decisions, they're figuring, all right, this is going to end soon, and maybe things are way oversold. There's going to be at least a bounce back. Oh, stocks. Don't want to jump around, but we'll look. That's not so much a J-hook as it is kind of a scoop, but you could call it a J-hook. Same scenario. There's your McMuffin. There's your kicker type signal. There's your first target filling this gap. There's your second target hitting the moving averages. I don't think there is, again, when you hear somebody says I think or don't think, but think of the rationale. Trump is not going to let this economy crater. So right now, there's obviously the strong decision-making process of what is good for the American public as far as keeping everybody safe, but also not letting the economy just get destroyed. So at least people realize now, when they're making their investment decisions, that that is the mindset of Trump/administration, that they're trying to do everything possible to kind of walk that thin line of we're ready as soon as we see there's evidence that the virus is slowing down to pull the plug and let everybody back to work as fast as possible. Bill, through the years, there's always been this big concern about the national debt. To me, the national debt is just a number. We don't know how many little pieces of green paper is out there and how it's affecting the market or not affecting the market or not affecting the economy, because everything immediately has its equilibrium. That if they're putting out more money, something else happens someplace else to offset it. So it's not like all of a sudden it becomes a big imbalance. And anyways, not to get way off track again. That could be, but I don't think that they had anything to offset their national debt there, where it seems like the American economy is much bigger than Greece, obviously. I'll get to gold. Let's see. So here's another one. Capri, double bottom, Morningstar signal, best friend signal. Where's your upside potential? Up here or even here. So going from 10 to 16, 17, that's a good 50, 60% upside. All right, let's go real quick to the... all right, so gold's up another $25. Let's go to a chart. Look at your Morningstar signal on gold. But now look where you are. So this is why you always want to see what might be what everybody else is watching. You're not quite in the overbought area, so you definitely need to see this break through. If this started trading off, what can we assume? This is becoming a resistance level. So the reason I'm hating to look at the futures charts is because I kind of walked away from them because I thought there was going to be some big money on the reversals. But over the last month, I could have paid for another barn at $1,700 or $2,400 of margin. Probably has now produced $15,000 worth of profits in that move. That's hogs. Cattle, same scenario. Kept going down the limit, then it kept going up the limit, then it's gone down the limit. Today it went down the limit, and I think that was an excessive limit, down 45 cents, or usually the limit is 30 cents. So there's another one where at this point, after the hanging man, probably your $1,700 trade probably produced $9,000, $10,000 worth of profit. Okay, now let's get back on track. We did Capri. Here's Nordstrom's. So Nordstrom's has done a doji back up through the T-line. Where's the upside potential? First target, second target. Jules, that's right. Now take a gander again at... Yes. So the further away you move from the T-line, likely to pull back. So why would you be a little bit more alerted here? Because you can see that there might be a resistance level. If I was long gold, where would I have my stop? Probably at today's low. Yes, I will do that pretty soon, Frank. Unfortunately, it's so simple that in one 45-minute lesson, you're going to know everything I know. But that may not just be with Capri, C-P-R-I. Kind of a double bottom and starting the next wave up with a best friend signal. T-M-H-C, oopsie. Double bottom. Again, what's our upside potential? There's a little gap right there. If it comes back up to the 34 or this level up here, that's a good 50% upside potential. Hang on to your individual ones until I get done, because I want to show relevant pieces of information. RNFN. So look at what your prospects are right now. If you did nothing but the best friend signals, now you can narrow it down to which ones of the best friend signals have the best upside potential. As you can see, there's a lot of them. This one might only have about a 20%, maybe a 25% upside. There's some that had 40 or 60 or 80% upside. So on gold, there was their inverted hammer. Yes, your little inverted hammer, Morningstar signal. And where did it do it? Right here at the 50, at the T-line, at the 34. And a close above the T-line, what's your probabilities? It was going higher. Let's see. A, D, and T. Another double bottom. What's our upside potential? Did I do this one already? Maybe not. But look where its first target is. Up here. So there's a 5.5 points on a $9 stock. That's a 50% upside just to go to there, and then potentially up here. Now, is that outlandish? Not in these market conditions. Because look what the downside did. Went from basically 28 down to 6. That was a huge drop. Now, even if you throw your Fibonacci retracement numbers on here, I'll use that point right there and that point right there. If you're watching what everybody else is watching, we're watching the 34. There's the 38% retracement, 50%. There's the 50. There's the 62% retracement. So is it going to hit any one of these? We don't know. DB, I closed out stock shorts. I kept some calls only because they went down so low that it wasn't worth selling them, just in case the market turns back around. For example, Kohl's went up so fast, the options went down so fast, I didn't even have time to get out of them. So I thought maybe when Kohl's hit the T-line, they would turn it around. Well, after hours, they're still selling up positive. So this might have a bounce back up here, which also gives you a 25% upside. Do you ever sell puts? I do when the market's not so volatile. If it's less volatile, there might be times where buying a call or a call spread doesn't make as much sense on a risk-reward basis as selling the put or a put spread. Oh, I was going to do Kohl's anyways, and I did. We did Tesla. Did we do Tesla? Tesla, if it opens positive tomorrow, there's your bullish flutter kicker, which means there's probably a lot more upside. Hasbro, if this opens positive tomorrow, look where it closed Friday. Ah, humbug. And then look where it opened today, at above previous day's open. If it opens positive tomorrow, what all factors do we have on this? Number one, we probably got a bobble breakout. Number two, we got it going into wave 3. Number 3, if it opens positive, it leaves, even on a day trade, it's going to trade probably the same magnitude as that candle. So if it opens positive, that's not acting as a resistance. Now it's acting as a bobble breakout and wave 3. Yep. And how is it starting? With one of your strongest reversal signals, the flutter kicker signal. Here's kind of your kicker signal. Closed here, opened here, went this way. What type of pattern is this one? This is a Seagate. Also doing a J-hook pattern. Where's our resistance levels? Maybe, but if this is wave 3, that's telling us they're probably going to blow right through those levels. ERI. Whoops, what happened there? Oh, this might be just a baby kicker signal, but still giving you the same implication. They gapped it up and went the opposite direction, and it closed above the, well above the T-line. Sabre, same scenario. Let's make this a kicker type signal, double type bottom. You can buy this because now if this goes back up to, I think is that the 50 or the 34? Even to the 34, what's that giving you? That's giving you almost an 80% upside. And if it goes back up to the 50, that's giving you 120% upside. Hasbro, what part does oversold stochastics play in this one? They're not oversold. They're overbought. But why is that not a concern? Because we're playing the pattern now. And what happens to a pattern breakout, especially on a doji or a bullish flutter kicker? Stochastics don't mean anything. So where do you buy the signals? You buy the signals when you're in the oversold area. Where do you buy the pattern? Usually the pattern's going to break out when you're in the overbought area. SBSW. Kicker signal. And also use the T-line as support. First target, second target. So right now you've got the opportunity. I know most people are happier than pigs in doo-doo if they can make 10% return on their portfolio each year. There's going to be some trades here where you could probably make 40, 60, 80, 100% in a matter of 2 weeks. Yes, so this is why we're going through them, because now with so many charts, you've got the opportunity to sift through them and say which ones have the biggest upside potential. I want to buy things that give me, there's a gap right there, that's 2 points on a $8 stock, so that's a, should be able to figure that out, a 25% upside, 20% upside, or up here, giving us a 6 points on a 6.5 points on an $8 stock, about a 70% upside. Yes, so this is why a lot of people ask, how do we know which ones are the best ones? Well, you might not be able to handle a lot, but if you become an expert in just a few signals and patterns, now you don't have to worry about what all the rest of them are doing. You find the ones that you know how to trade. So here, INO, which was kind of dead, now did a left-right combo, gap up, use the T-line as a support level. If it opens positive tomorrow, what type of signal do you have? Anybody? Class. Doji sandwich. Correct. And if it opens positive and trades positive, what's it telling you about your pattern? They're breaking out of this wedge formation. Billy, there's your T-line crunch. There's your little gap up. What do you do with this one? There's your big morning star signal, gap up. All you can do here is stay long. Nice steady eddy. This one is interesting, mainly because it's doing a nice buy signal. If it opens positive, you can be buying, because what's the worst case scenario? It only comes back up here to 14. There's a 40% upside. What's the best case scenario? It comes back up to where it was at one time, which not too long ago, it was 100 or 75. If this is showing that the housing industry is starting to come back again, and kind of think of what the rationale is. You've had people sitting at home for weeks that wanted to buy a new house before they were locked in. There's going to be probably bidding wars on houses as people are allowed back out to play, which means not only could this move from 10 to 14 or 15, this could move to 40. So that might be something where, say, all right, maybe I buy some calls on this one and go out a little bit further, meaning out to May, and see what that does over that time frame. Again, each person should have their own risk-reward factor in their own head. It doesn't necessarily mean in their own head, but some people are comfortable with trading with options 2 weeks out. Some people are more comfortable trading options 6 weeks out. Steve, I don't even know. Have to look at them. Do you have a scanner that can do the heavy lifting of the system? you don't really need it, Martin, but you can set up your scans that way. And that will do, it seems like everybody likes to figure out the scanning. We'll do another scanning session. I guess as long as we're locked in, I'll try to schedule a Wednesday or Thursday or Tuesday or Wednesday night session. I got to take a look at my calendar here. What is today? Today is the 7th. Oh, we got something going on tomorrow night. Kind of introducing the day trading. We're going to have a day trading that 2-hour type session on the 18th. Just going through day trading setups. Today's the 6th. Oh, I'm not even looking at the right calendar. What's tomorrow? Tomorrow's the 7th. I've got something tomorrow. I'll have to check to see what it is. I don't know what it is. Becky. Yeah, it's probably one of the $47 lessons. The reason we charge is because I got to pay for different things to, like, have to pay Abe to get all that set up and that sort of thing. Sean, yes, you can buy the videos like you were there. The disadvantages that you might not ask questions right at the time that we're doing something. But a lot of people buy the video afterwards, so they don't have to sit there at the time that we're doing it. They can look at it when they want to. And then asking questions is no problem. If you get to a slide or you look at a pattern and you have a question, then you can just come into either the chat room or email me and say, XYZ stock was doing a such and such pattern. What does that mean? Or when do you enter? Or what? So you can still ask the questions. You just have the benefit of not having to sit there for the 8 hours that we did. Not 8 hours, 16 hours that we did. Oh boy. Let me ask Abe. Hold on for a second. Okay, I'll put it in as soon as he gets back to me. So look at all the good chart patterns. This is Crocs. Where do you think the next target is likely to be? Back up here. So you can pretty much calculate. HS, he has recently had a baby. So he's doing a lot of running around to doctors. So just keep emailing him. He'll get back to everybody. Okay. I'm still got relatively high cash level until we see that we're out of this mode being up, down, up, down, up, down, up, down, up, down, up, down. I want to see that the trend starts. Then I'll start committing more funds. Yes, that's right, Bill. And he did. Oh boy. Hold on. We're working on it. RK, all you really have to do is find a couple that you really like. Well. Okay. We'll have the, if somebody wants to have the weekend training, I'll see how they've got the recordings and get those out. Okay, so I forgot where I was. All right. Did Crocs. Etsy was setting up. We saw the left-right combo gap up. That price still has more upside. The nail was the builders. Okay. Hold on. We figured it out. We just figured out all you have to do is buy the same link that. Okay, so nail. Again, if this opens positive, I mean, you've got lots of running room. Do they have lousy options? All right. And the crunch. Here's another thing that we kind of addressed in the weekend session. Once it gets above the T-line, look how it kept crunching. The T-line kept crunching right up through the resistance level. That would have made us a little bit nervous, but there was only one criteria on this day. If it opened lower, you closed out the position. It failed at the 50. Another T-line crunch right up through the resistance level. So this is why the T-line has got such good indications of strength. Here it is. Okay. That's it. Okay. All right. All you have to do is sign up like you were going to sign up, and you'll get the links to the videos. ATI is, yes, kind of your slow curve and or your again, your J-hook pattern. You could classify it either way, but it still has the same ramifications. Your best friend, gap up. Tells you could still be buying this one on positive trading. Where's your target? First target here, fill in that gap. Second target, probably fill in this gap up here at the 50. So now, will they get there? Doesn't necessarily mean they're going to get there, but at least when we're buying, we have an upside target that makes it worthwhile on those. Oops, we did ATI. Here's another. Peloton was a T-line crunch. An LPSN, same scenario. There's your kind of your slow curve J-hook pattern with a doji gap up. Where do you think your next prospective target is? Up here, 8 points on a $22 stock. I can figure that out. It's about a 40% upside. Okay. What else do we got here? The oils. Crude oil backed off a little bit today, but look what it's doing. You had your doji, inverted hammer. Oops, use a second link. Let's see what the second link looks like. That one's easier, okay. All right, don't use the first link. Use this link, might be easier. All right, so remember, if you're buying the videos, your only disadvantage is that you can't ask questions right at the time, but that doesn't stop you from asking questions later. MT, that's part of the money management. If you've got something, and I'm trying to think of something. Let's say you own this one. You had the T-line crunch, bobble breakout. Now you have a bearish engulfing. Where is it? You have a sell signal in the overbought area. It might trade higher, but if it opens positive and trades positive, is it the best place to have your money once you started seeing some sell signals? And if you can look at this and say, what's my upside potential? Nothing to really hang your hat on. Yeah, take money out of one that looks iffy and move it to something else. Inside Harami. Oh, inside Harami. I don't understand that, Martin. They're not changing volatility. They're showing a change of direction. Oh, I'm thinking more on a trade. you can't tell. You can't tell which ones are going to move better than the others. So if I'm looking at, close out a couple positions, I might be more apt to, what has happened here? If I'm looking at a couple positions, yeah, I can't tell which ones are going to move and which ones not, because they've all got the probabilities of moving. Yeah, all haramis are inside days, but in Japanese candlestick analysis, basically what they tell you is that the selling has stopped. I'm trying to think of, I can't think of any haramis right now, but depending on where they occur, I don't have one to give an example right now. So looking at the Dow Jones, didn't Thursday show bullish engulfment, then Friday indicating bull signal? No, because on Friday it traded lower, right? Thursday did a bullish engulfing, but where did it close? First of all, this is your harami. This is a bearish harami, which works more effectively if you're in the overbought area, but it still is significant because after the bearish harami, which told us the buying had stopped, they gapped down. That was a good indication that maybe they're going to sell it off again. Then you had a bullish engulfing, then a bearish trade. But what was this telling us? Are these signals in here? Remember, you're still in a trend. So they aren't as relevant as seeing a signal in the overbought or oversold area. Vistal harami. Vistal harami. No, there's no, well, this one was a bearish harami doji. Didn't confirm, but it was a doji followed by a hanging man, followed by a bearish engulfing signal in the overbought area. That's getting a little bit dicey. 326. Oh, bullish harami? Yeah, when they pulled back and did this little bullish harami, what did it tell you what was happening right here at the T-line? That the selling had stopped. So that was also, again, we're not in the overbought or oversold area. It was just kind of telling us, now they pulled back to the T-line. They're not selling it off. The T-line's probably still acting as support. Okay, so a number of good trades. Now, this is why you want to know exactly what a signal looks like. What is this signal right here? Not. Yep. So if this was a signal, it would have been shown to us or explained to us by the Japanese race traders that it has a significance. What is this signal right here? No, it's not a trend kicker, because where does a trend kicker? And so this isn't a signal. So when you see a that was the trick question. Where does a piercing signal have to open to become a piercing signal? It has to open below the low of any trading of the previous day, correct? So this isn't a signal, but what did it indicate? That you're probably going to have an uptrend or up move, but not a very powerful one. So you just watch to see what happens when you hit the first resistance level. So if I'm looking at this, say, oh, this was up a good percentage. Do I buy this? Not when I've got dozens of very strong observable reversal signals. So with that, I was going to try to mark down which ones. Now I'll have to go back through them and figure out which ones are the best. So the reason we recommended this for today, without even knowing what today was going to be like, was because of the kicker signal. We know what that's going to produce. High probability of more upside. Isn't the big hammer? I'm glad you asked that. On the 18th. What is the definition of a hammer signal? I'll speed it up. The tail needs to be 2 times greater than the body. Well, you can probably see that if you took that body here, there's one body. Well, it's not quite 2 times greater than the body. So it's a hammer type signal. It's just not a hammer signal. Now that's why when I tell people you don't need to know formulas in candlestick analysis except one formula, the number 2. The hammer needs to have a tail 2 times greater than the body. The inverted hammer needs to have a tail 2 times greater than the body. The hanging man, same scenario, and the shooting star, the same scenario. Okay. I guess that's about all. It's made up a signal. Yeah, it's a made up signal, one white soldier. Yep, I still don't know how recent that one has been discovered. So here's what I can pretty much tell you. If you just follow the 12 major signals, learn them, 6 longs and 6 shorts, you'll have more trades than you'll ever be able to handle. There's always going to, today, there's probably going to be at least 80 good charts out there. Now it's just a process of figuring out which ones are the strongest. And the strongest, to me, were kind of the best friend signals, the doji gap ups. So, all right, with that, anybody have any general questions on candlesticks? Oh, man, we're already over time on the best friend on DHI, the stochastics near the middle. Yeah, but remember where the stochastics are usually on a pattern breakout. They're probably not anywhere close to the oversold. We're still buying the signal in the oversold area. We're buying the pattern when the stochastics are probably much closer to the overbought area. John, that's part of the that's part of the recognizing what type of market you're in. That's why I'm saying you still have to watch to see if this is confirming, because all the way down you had down, up, down, up, down, up, down, up. Now you have up, down, up, down, up, down. So you still have nothing that's, I'm going to say, congruent But now we've got a doji gap up pattern again. So here's what your analysis needs to be from this point. This is a good bullish signal. This was a good bullish signal. You start combining them, you start anticipating that investor sentiment is changing and it's probably wanting to go higher. Just by the candlestick major signals mouse pad. There you go. Yep. Okay, I guess with that, Jim, go ahead and do the double line. And in 4.2 seconds, do the next double line. Okay. This is McCormick. Whoops. McKesson. Kicker type signal. Not a great looking chart, but you have a fry pan bottom. You still got a lot of junk to get through, but you do have a kicker signal. If you like it, you can start buying it, but you have to fight through all this stuff. And let's see what the you got a fry pan bottom setting up. I would probably be more apt to buy this once it got out through the moving averages. Netflix is good. It's not the best or strongest, but it's still in an uptrend. And it's not the strongest because it's already been acting well, much better than some of the other ones. Whereas Apple looks like it's just now getting started. It's moved sideways during this time. The Russell, another one that did a gap up today, kicker signal. You can be trading that to the positive side. DTE Energy, J-hook pattern with a best friend signal. THC. Nothing yet. Let's make this bigger. You do have a double bottom setting up. You're probably going to be more apt to be buying this one if they can get, or if and when they get back up through the T-line. Yex, that's a good chart. You can buy this one. Just don't let it close back below the T-line. Sally, another good chart with a very simple entry strategy. You've got a Morningstar signal, best friend gap up, closing right at the T-line. If it opens positive, what is it telling you? They're confirming the signal, and they're telling you the T-line's not going to act as a resistance anymore. FTI, another slow curve type setup. You can still be buying this one. A gap up here, so that's still a good, I can figure this out, good 60% upside. CGEN, not your greatest chart, but you do have a left-right combo. It's moving in the right direction. You definitely want to see it get through the 50, and if it does, then you've got a lot of gap area to head to. Maxar started back up. You can buy this one. You definitely need to break this downtrend, though, which looks more like it needs to get through the 200 to get to do that. Halliburton. Oh, how come I didn't even do because I forgot to do the rest of the oils. Halliburton, you stay long on this one. CLR, you can stay long on this one, or you can still be buying this one. EC, a bigger energy company, stay long here. And Cork, notice where it is in the overbought area. Had a nice fry pan bottom. So now you're at a place that everybody else is watching. If it opens lower, you close out the position. It needs to open higher and do a doji sandwich breakthrough. Microchip, nice chart. Expect this being your first target, fill in this little gap up here. And Williams Sonoma, good chart. Why anybody would be buying pots and pans right now, I do not know. But there's your best friend gap up J-hook pattern. Silver. Stay long. Did we do gold? I thought we did gold. Gold up right here at the resistance level. And Planet Fitness, kicker type signal. You can get ready to buy this one if it opens positive. If you were short, probably would have covered it today. You could always reshort it if it comes back down through the day's open. OCUL. Little hammer gap up. Not your greatest chart. It needs to break out some more. If I was buying this, I'd buy it up here knowing that it broke out through it. Of this kind of congestion area. Needs some more strength. And another best friend on Echo. Once again, it needs to get up through the 50. So if you're buying it, it needs to get to the 50. Caterpillar was acting strong because of the prospects of the infrastructure repairs. But now you're sitting right smack dab at the 50 in the overbought area. You put your safety stop just below today's low. If it comes down through there, it's telling you which way they're moving after a doji. Whoop. Oh, did I type in Apple? Apple, as you saw, was doing a little J-hook scoop type pattern. Whoops, I did type it in. You can be buying this one on positive trading. You can see how the downtrend has now been broken out with this best friend signal. Tesla, if it opens positive tomorrow, doing a bullish flutter kicker signal, you want to be buying it. Royal Caribbean, another one that might be bottoming out. So here you might be looking at things where people think these, even with all their problems, are oversold. And Delta, nothing yet. If you're short, you stay short, but I'd use today's high as a stop. And United, same scenario. Fitbit, nothing there yet. There's just nothing to get excited about on this chart. Maybe it's pulled back. There's your bullish Harami telling you the selling has stopped right here at the 50. If it does trade positive, you can start buying it. It's just not a very exciting looking chart right now. And Lake was trying to move up. It needs to open positive. If it opens lower, what's it telling you about your trajectory? Just sideways. And Celino, another one that has to open. I probably would, if you didn't close it out today after the failure with your kind of your bearish engulfing hanging man, you definitely close it out if it opens lower tomorrow. And SKT, that's a little kicker signal. Wouldn't be afraid to be buying that one on positive trading. HGV, kicker signal, another one you can be buying. Lear, another one you can be buying. Double bottom, doji sandwich, best friend gap up through the T-line. At least figure they're coming back up to test this area. Hanesbrands, you can buy this one. Now, any of these that you buy, remember, if it came back down through the T-line, you close it back out. Zenga, and a little J-hook pattern. You can buy this if you like it. Microsoft, nice J-hook pattern. This one you can buy. If this is wave 1, wave 3 is probably going to take you back up into this area again. Apache, you can buy this one, double bottom setting up. And today you had Doji bullish confirmation. And crude oil backed off. Couldn't say. Crude oil right now is trading back positive. Exactly what you would have thought. It's moved positive after the doji consolidation. I would still anticipate more upside. Wi-Fi, slow, T-line crunch, steady eddy. Don't let it close below the T-line. And AUPH, buy this one on positive trading. Wave 1, wave 2, bounced off the T-line. Wave 3 should at least take you up here, but more than likely it could take you back up into this area. God, I'm guessing that's NVIDIA. NVIDIA has a J-hook pattern starting with a kicker signal. You can buy this one on positive trading. Oh, I forgot to do Logi today. It's still in this uptrend. Notice how the T-lines have been acting as support all the way up. Under Armour, didn't we do this one? This one's setting up for a bullish doji sandwich on a positive open. And Manpower, you can buy this doji sandwich confirmation. There's your piercing signal. Notice this one closed more than halfway up this candle. And it opened below any of the previous days trading. So that's, now you've got a doji sandwich. Probably heading for the, at least the 34. Lulu, J-hook pattern. Kicker type signal. Got to get through all these moving averages. We did Apple. Apple's got the little J-hook pattern. Space didn't do too much. No, maybe it did. There's your kicker type signal. You can be buying it, just don't let it close back below the T-line. ENPH. Kicker signal, you can be buying this one. UGAS. Another one that's breaking out. Not a real strong signal. The natural gas, I don't know, where is natural gas? NGAK0. Natural gas popping up a little bit. STE, you're right at the first target in the overbought area. Look at your doji sandwich that got you there. Look at your little kind of bobble breakout at the 34. So very simple. I'd have a safety stop right here. It needs to open positive and trade positive to get through to tell us it's not resisting up at that level. Visa. Kicker type signal, same scenario as the biggies. Doji sandwich, J-hook pattern. Clovis, J-hook pattern. Doji sandwich. Watch to see if they do a bobble breakout. TLRY didn't do too much today. I wouldn't be in this one. Just nothing there. CGC, did a little bit better, but still probably not anything. That's not a real kicker signal because it didn't open above the previous day's open. And GDX, another bobble breakout potential. Look at your little inverted hammer bullish engulfing signal. FAG, stay long, as long as you're above the T line. I think we did ENTH. Yeah, kicker signal. MTOR, kicker signal. You can be buying that double bottom. MYGN, not a kicker signal, just an up day. It's probably going to head higher, but it wouldn't be one of my favorites. I think there's too many other good ones out there. That could be. They might be buying the spices. Or at least toilet paper. Now they don't sell toilet paper there. GNK. Kicker signal also. Just watch what it does at the 50. And Nordstrom's also had a nice best friend signal. This one you can buy with the idea that if they brought it back up to the 50, pretty close to 100% gain on that one. IBB, bullish engulfing, trend kicker. Make sure it can get through the 50. That's kind of the resistance level. So you stay long, just watch to see what it does at the 50. Magpie, failed. Should have been breaking out. If this opened lower, I'd close it out because it tells us it's not going anywhere. Was it this extended? Not really. I mean, that's just one move. If they had gone, now this was extended, but now they pulled back and you're doing a J-hook, so you know what the magnitude of this move should be, the same as this. So it's not like it's all of a sudden gotten way up too far out of its range. You're looking more, you should be looking more at the pattern at this point. Another J-hook pattern on Snap. Look for the 50. The 34, just that's the first target I'd be looking at because there's kind of gaps at those levels. APT kind of fizzled out today, but it's still above the T-line. If it closes below the T-line, close it out. That means it's not going anywhere. We did ATI. That's got a nice J-hook pattern. Blue Apron kind of fizzled. If this opens lower, close it out. There's nothing there. And UNG, stay long, but it also has to break through this. That's the natural gas. It still has to break through the resistance levels. Nice little gap up on Capital One. Double bottom. You can be buying this one. CRON. Nothing of any great excitement here. Probably got kind of a cup and handle, so I probably wouldn't pay attention to it until it gets back up through the 50. We did Etsy. That Etsy came up off the left-right combo. You can stay long. Just watch to see what it does at the 50. Labu, that's a good bullish chart, which at least tells you the biotechs are starting to come back. Micron, good chart. Look for it to head for the 50. Silver, good chart. Same scenario, heading for the 50. And LPSN, nice J-hook pattern. Same scenario. Next target is the 50. Jern, nothing exciting here. I would probably be more apt to buy it after it came up through the 50 doing a bobble breakout. And AMD kicker signal. You buy this one on positive trading because you'll also have a bobble breakout, J-hook pattern, starting with a kicker signal. Gold is still moving up. Whoops. That's the, the ETF or the, and here's gold. Whoops. GCAJ. Here's gold right now. Watch the resistance level. Okay, so again, a lot more energetic about ready to buy, whereas in the good old days before candlesticks came along, I would say, oh, I want to make sure they're buying this, and I'm usually buying up here after the major portion of the profitability is gone. But we can see signal number 1, signal number 2. I remember. Yep. Okay, everybody. We'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.